Amina, can you hear me?
Yep, I can hear you.
Perfect.
I'm just getting the PowerPoint up.
I mean, I assume he'll be able to share his screen, but just
Yeah, I'd rather that because he can click when he wants to versus.
yeah, he had asked us to upload it. I wasn't sure what exactly he meant by that, but
Right.
so I sent it to you just in case there was an issue or a challenge. And we're prepped to go live in Facebook, right?
We're already there, so they're here.
Yeah, you had the chance to get all cleaned up.
Oh, please. Just finished making pancakes and eggs.
Uh,
Half raw eggs.
Oh, man. So far this morning, I built a trampoline, took the girls out to see the Easter Bunny go by in a fire truck, and got back here just in time.
Jeff Brotman. Good morning, Jeff. We miss you. Virtual hugs.
I did get a message from Matt Carbray. He should be on in a couple of minutes.
Okay.
There he is. Matt, you got audio, sir?
Yeah, can you guys hear me?
Yep, we got you.
Awesome.
So we obviously have a couple of minutes, and we'll probably give it a couple of extra minutes just to let the crowd build up.
Sure.
And then I'm going to give 99% of the time to you because you are the closest thing to an expert on this call right now. As close to as anyone can be to an expert in all this stuff.
Yeah.
So I'll address the group quickly, and then I'm going to let you take it and run. Amina's going to keep an eye on the chat box for Q&A.
Great.
And then we'll just take it and run.
Sounds like a plan.
Yeah.
It's just a crazy, crazy time.
Unbelievable.
I mean, I've been working this weekend just trying to better understand each of the individual banks and how they're dealing with this. And some of them are online. Some of them finally got online over the weekend.
Yeah.
And there's just a lot of misinformation out there, as well as there's new information that as the days go on, the laws are changing. So a couple of days ago, there was a standardized application, and then that changed, slight nuances between the two.
Yeah.
And then some of the terms regarding the loans and then what's going to be forgiven. So what I have is accurate as of today, but that's not to say that tomorrow things may be slightly different.
100%. The analogy I've been using with people is we're giving you the best information we can today. To ask for any more detail than what we're giving you is kind of like asking like what the weather's going to be in a month. I can tell you in New England, it's sort of like this, in May, but other than that, I can't tell you if it's going to be raining, sunny.
Yeah, sure. Well, the good news is that depending on how your agents are set up is going to determine whether it's an April 3rd initiation date for applications or whether it's an April 10th. And more of your people are likely not incorporated. So they're just 1099 Schedule C. So it doesn't start for them until April 10th. So there's some time to get their stuff together, which is good.
Yeah. Unfortunately, the way our state is set up, the majority of our agents are not incorporated or functioning as an entity. And a lot of in order to function as an entity in Connecticut, you have to have a broker's license. So most don't go through the trouble of doing that. Other states, you can function under an entity with a sales license.
Yeah, so I've gotten conflicting information over the years about people's ability to set up an S corporation to have all real estate money paid to you and then you turn around and ultimately put money, sorry, it's my little guy. It's almost bedtime for him.
Yeah.
But so getting money paid to you as a 1099 and then turning around and putting that money into the S Corp and taking a salary and funneling it through that way. I've had some CPAs say, I see no issue with that. I've had other CPAs say, well, I don't know if that passes the smell test, but I know that there's some Keller Williams agents that function that way. You know, you really have to be doing a certain amount of volume, in my opinion, for the S Corp to even make sense.
Exactly. Yeah, there's a tipping point where that makes sense or it doesn't. Yeah. I mean, I've heard the same thing, and my input on that is make sure you talk to the CPA, the wealth advisor, the attorney,
Yeah.
and really lean on their advice. Because same as you, I've heard arguments both ways that that's setup works, and I've heard other arguments.
Yeah.
Candidly, I wish they just would make it easier for them to incorporate. You know, other states, almost every single agent is functioning under an entity. But
Sure. Right.
Matt,
Jen, happy Sunday, Jen.
I
Another
just want to
Zoom
ask
meeting.
Matt Carbray if he does have his PowerPoint, rather than me having to click through for you,
Oh, sure.
would share your screen because you're on as a panelist. You can share your screen, and that way you can control the clicks.
All right, Amina, good. I will pull that up.
And
I'm going to give it.
with the live stream. Matt's
What's
not going to be live streamed in Facebook. It keeps saying unable to stream video to Facebook. So I tried it like 4 times. Zoom must be having some sort of but this is being recorded, so we can always share the recording afterwards.
Okay. I'm going to give it about 2 more minutes and then we'll kick off.
Sure.
How
I
you
have
doing,
a presentation on my end here, so whenever you want to click over the screen, just let me know.
Mm-hmm.
Doing great, Matt. Just cooking some lunch for Evie, so I'm going to be on mute for a little bit.
Sure.
Okay.
That's what I keep saying. The one thing I love about these Zoom meetings is just strips all of us down. Like, all of a sudden, being showered before the meeting's irrelevant. Having a baby crying in the background is irrelevant. Dogs barking is irrelevant. Just is what it is.
Yeah. Well, the new theme is people having Zoom happy hours. That's
Yeah, we've done them.
yeah. I've had a couple of them too.
Yeah, St. Patty's Day, we actually did a Zoom happy hour. And
Beautiful.
then I've had a few friends that we're connecting at the end of the day on a Thursday or a Friday.
It's awesome.
I mean, you got to find a way to connect, man. We'll all go
Yeah.
crazy sitting home by ourselves.
Yeah, we need to have some social interaction.
Yeah. All right, so I tell you what. Well, yeah, I'll give him another minute. Let's see what we got building up for a crowd here. Okay. Yeah, I'm going to give it another minute and then we'll kick off.
Awesome.
I'll try it one more time for the live then.
Yeah, are you guys going to try and record this so that those that can't?
We are.
It's
Yeah.
already being recorded, so
Okay, great.
yeah, we're good to go there.
Okay.
All right, so I've got 5 after on my end, so I'm going to go ahead and kick off. So first of all, everybody who's watching, I want to thank Matt Carbray. Matt Carbray, for anyone who doesn't know him, is a wealth advisor who works out of Avon. He actually works with a lot of our Keller Williams agents, works with me as well. He's an awesome guy. I've known him for quite some time. So not only is he good at what he does, but he's a great person as well. And he was kind enough to take time out of his Sunday to join us and share the information that he knows as far as the resources that are available for us, right? So the government programs, the relief programs that are available. Matt probably knows as much as anybody can know about it. He's really put a lot of time and energy into trying to stay on top of the changes as things are continually changing, right? So, we were talking about this before we kicked off here. I don't know if it's fair to say anybody is an expert in any of this because it's all just happening so quickly that we're all figuring it out as we go. So the purpose of this call is to be able to leverage the time, energy, and effort he's put into being on top of this, share with you guys what is out there, what's available, what the nuances are to the highest degree that we can. and then give you guys an opportunity to ask some questions if you have any, if we leave anything out or you have any specific questions. I'm going to ask you that you put those questions in the chat box. Amina's going to keep an eye on the chat box, and we'll circle back at the end of Matt's presentation. We'll deal with any Q&As that we have. The other thing I want to say before I let Matt take over is, you know, there's a few things we all need to be doing. Number one, we do not know how long the governor is going to keep businesses in a restricted mode. Okay, but here's the reality. You know, whether or not we think this is going to get lifted by the end of April, whether or not we think it's going to be lifted by the end of May, whether we think it's June, whether we think it's July, we really don't know. But what we know is the vast majorities in our state are either closed or operating under some type of restriction that's limiting their ability to function and somehow impacting their revenue. We also know that's leading to a lot of people getting put into the unemployment category, right, which also has a major impact on our industry. And here's a couple things we need to know. Number one, all of this is also impacting the lending industry, right? So in the background of the lending industry, we've got Fannie Mae, we've got Freddie Mac trying to streamline things to keep the industry going, yet behind them, we have the secondary market, which are investors, right? Those investors are doing the opposite, right? There's a lot of fear in that space right now. So that's impacting lenders' ability to lend, it's impacting rates, right? So we have all these things going on. So here's what we need to know. We have to be able to focus on what we can control because a lot of this is out of our control, right? So there's no point in worrying about it. The best thing we can do is pay attention, gather as much information as we can, and make the best strategic decisions we can based on what we know, okay? So what we do know is we're going to stay in this restricted mode for some period of time. What we also know is when we come out, the reality is some businesses are going to be able to fire back up and some are not, right? In order to reopen, the business is going to need the capital to do that, which the government is trying to help with, and hopefully that will allow most of these businesses to reopen. Yet, some will not be able to open immediately, some there will be a delay. And here's the other thing. If tomorrow, all the restaurants and movie theaters and bowling alleys and nail salons, if they all open tomorrow, chances are most of us would not throw our family in the car and rush to a crowded restaurant to stand elbow to elbow with a stranger, have a dinner, and then go to a movie theater, right? There's not only going to be a time frame that we're closed, there's going to be a time frame for businesses to get back up and running, and then there's going to be a time frame for people to get comfortable going back out in public. The fourth reality is there's a good chance this virus is going to cycle, right? So we may come out of this shelter in place or whatever the official term is for this, and there may be versions where we have to do it again for short periods of time. So the point is we don't know, but what we do know is it's going to have some kind of an impact, and we don't know how long it's going to last for. So the point of sharing all that is we have to prepare for it, right? Again, it's not about worrying, it's about being realistic and creating a strategic plan. So if you haven't already, and everybody who's on the call who's a KW agent in our office, we've been talking about this incessantly, you've got to take a look at your cash on hand, professionally and personally. You've got to look at what your monthly expenses are, personally and professionally. You need to figure out, based on cash on hand, how many months of capital do I have to fund my household and my business? And then you need to look at those monthly expenses and figure out how can I cut those expenses to extend the life of the cash that I have on hand, right? So you got to look at everything personally and professionally. If you don't need it right now, now is the time to get rid of it. So if you have 2 months worth of expenses, business and professional in your bank account, we want to turn it into 3 or 3 into 4. We want to stretch that cash as much as we can. It's all about creating a runway, right? We need to know that we have the runway so that we all know we're going to continue to focus on doing business, yet the longer we can make our runway, the safer we are that we're going to be able to work through this. So take a look at those things. The other things is, you know, we do know that creditors, mortgage companies are offering some degree of lenience. A lot of them are. So if you haven't already, make those phone calls. There's no value in waiting until you have a problem to contact your mortgage company or your creditors to find out what they are doing for you. If you have an opportunity to delay payments without any penalties to keep cash in your pocket, that extends your runway also. So do these things. And then that brings us to what Matt's here to talk about, right? There's programs that are being made available, And he's going to spend the next 45 minutes to an hour educating us specifically on what's available and answering your questions. So all that being said, Matt, take it away.
Thanks, Matt, and I appreciate everybody taking a Sunday afternoon to join us here. There's a lot of information that's out there, and what I'm hopeful that I can do over the next 45 minutes or so is to talk about how this is going to impact individuals, and then how it's going to impact those of us that are self-employed, whether we are structured as a corporation, which some people file as an S corporation, whether we are a LLC, or whether we're a 1099. We're going to talk about what's available. We're going to talk about some of the important dates that you have to be aware of. And then we're also going to talk about some of the planning considerations that you may want to think about so that you can improve the potential for you to get some help. So I'm going to go over to my screen here, and Amina, I'll let you just kind of confirm that people can see my screen. Okay, can everybody see that, the PowerPoint here?
Not yet.
Okay.
So did you click share yet?
So I am on the actual presentation, but I'm guessing I may need to do it on Zoom is what you're saying.
Yeah, you go to Zoom first.
Okay, so I'm on Zoom.
And then all the way in the bottom,
Yeah.
you'll see share screen with a little green arrow going up.
Yeah, okay.
And then you should see your PowerPoint. Select that and then hit share. There you go.
All right.
We got it.
Okay, so now you can start
Perfect.
a PowerPoint
Okay.
you want to click through. You can do that.
All right, good. All right, so let's, here we go. All right, so again, we're going to talk about the SBA loan and grant availability under the CARES Act. The CARES Act, if anybody really wants to know what that acronym means, is the Coronavirus Aid, Relief, and Economic Security Act. Again, we're going to talk about where the money's going and to whom. There are various different facets to this. The relief is going to individuals, the self-employed, some contractors, small businesses with less than 500 employees, and large U.S. corporations. So if you really want to know how the dollars are going to be flowing, if you look at the screen here, there is a substantial amount of the 2 trillion. They're saying it's actually closer to 2.2 trillion. But as you see, 604 billion, let's just call it, is going to individuals by way of cash payments, which we're going to talk about. Unemployment, which most people are not going to be in a position to qualify for. We'll touch upon that briefly. There's a little bit of student loan assistance as well. And then as you go down the chart here, you can see small business, close to 380 billion, or 19% of the stimulus is going to go to those that fit into our category as small business owners that employ less than 500 people, and the self-employed also are getting bundled into that category. So let's talk about the individual stimulus, and let's start there. So I tried to make this a little bit funny here. So let's look at Gary Keller. I suspect Gary Keller makes more than $70,000, but let's just say for argument's sake that Gary Keller is an individual taxpayer and he does not have any children under the age of 17. His adjusted gross income for 2019 is $70,000. Now you'll see in parentheses, I put below the phase out of $75,000. Anybody that is under $75,000 based on adjusted gross income, and we will get to what adjusted gross income is because it's very important that we understand what that means. It is not your gross income. It is not your net self-employment income. There are some deductions that go into arriving at adjusted gross income. In Gary's case, he is going to get a check for $1,200. Now, if some of us remember from 2009, the past stimulus, that was $600 per person, and there wasn't anything carved out for children to the extent that there is now. So Gary would get, based on his adjusted gross income being below the phase out of $75,000, a check for $1,200. If we look at another example, we have Sue and Steve Zillow. They have 2 children under the age of 17. What's important is that they are claimed as dependents. Very, very important. So with the tax code of 2018, you no longer got the ability to claim your dependents for a personal exemption. That's gone away, but you still do claim children as dependents on your tax return because there are other benefits that you get for having dependents, most specifically the child tax credit. There's also some higher education type credits, but if you've been divorced, you may or may not be able to claim the dependents. So it's important for you first to know who's claiming them. If this couple has an adjusted gross income of $165,000, again, if you're married, the limit by which you will get the full amount is $150,000. Well, Steve and Sue make $165,000, so their credit is actually partial. If they were under the $150,000 with 2 children, they would be getting $1,200 per person plus $500 per child. So they would be getting $3,400. But because they fall within the phase out range of $150,000 to $198,000, they're losing some of that benefit. There is a great calculator from Forbes that you can put in your adjusted gross income, how many children you have, whether you claim them as a dependent or not, and it will tell you what check you should be expecting. Now, the question that I'm getting from a lot of people is, well, okay, Matt, when am I going to get that check? It's all going to be conditional on whether you filed your 2019 tax return yet. If you have filed your 2019 tax return, then I would say that you should be expecting it in the next couple of weeks. If you haven't filed your 2019 tax return and you're delaying that for a lot of reasons that we'll get into, they're going to look back to your 2018 return, but that payment, that stimulus could take much longer because they're going to be giving out funds to those that first file their 2019 return, and then they're going to be looking for those that have yet to file it because the deadline now is July 15th, not April 15th. So those of you that are saying, you know what, I'm going to postpone my return, I'm going to file an extension for a lot of reasons we'll get into, and there's some planning here too we'll talk about, but you may expect to see your stimulus check much further into the future, may be even as far out into July or into August. Okay, so here's a really good chart that talks about the different filing statuses. So you can file as an individual, you can file as married, or you can file as head of household. You also can file as married filing separately, which very few people do. There's a select limited amount of reasons why you ever would want to do that. But if you're filing married filing separately, you're going to want to look at this individual column here. But what this shows you is whatever your adjusted gross income is, you can see how it kind of gets phased out. So 75 for an individual, 150 if you're married, 112,500. And eventually, as you get to these levels that I alluded to, let's go back one. You'll see at 99,000 it goes away, at 198,000 it goes away, and 136,500 it goes away. So this is going to be the determining factor as to whether you're going to get something or nothing. Okay. Another chart that paints the kind of the same picture. Again, someone who makes $100,000 who's married with 2 dependents is going to get $400. Again, $1,200 per person times 2 is $2,400. 500 times 2 is 1,000. 3,400. You can see how these things eventually get phased out as your income gets above certain levels. Okay. Now, what is most important in all this is to better understand what adjusted gross income is, because that's what's going to determine whether you qualify or not. So as you can see, as defined by the IRS, it's your gross income minus adjustments to income. So in the case of you being self-employed, it's going to look at whatever's reportable on your Schedule C. But then again, there are some reductions. Adjustments to income include educator expenses, which very few of us have, student loan interest, alimony payments if you have a divorce agreement that was prior to January 1st of 2019, because after that you can't deduct alimony anymore. And then most importantly, what I outlined and I underlined here is contributions to a retirement account. So any contributions that you make to a SEP plan or a solo 401k can reduce your adjusted gross income down, and that could help you potentially qualify for this. So we're going to talk about some examples coming up here, but I think of all of these adjustments to income, the most important one to get your income down are the contributions to a retirement account. And your adjusted gross income will never be more than your gross income, but the likelihood is that it's going to be lower. So don't just look at that Schedule C number. You have to look at your adjusted gross income, which for those of you that are familiar with your 1040, it's line item 37 on your 1040. So adjusted gross income, very important to understand. So, there's people that are looking back at 2018 relative to 2019. 2019 was a great year for a lot of individuals, a lot of business owners, and probably a lot of realtors. I mean, the economy was great. So when we talk about the eligibility for the individual stimulus, if your adjusted gross income in 2018 is lower than what it is in 19, thus potentially allowing for you to get the stimulus, whereas you may not get it in 2019, that's why you may not want to go ahead and rush and file your income tax return. You may want to delay that, because what was stated in the CARES Act is that they are going to base it on the most recent tax return that has been filed. So again, there's some planning here. In addition to that, there's some guidance that when you go to file your 2020 return in 2021, the IRS is going to look back and say, would you maybe have qualified if your 2020 income is much, much lower, which for a lot of us it could be. And there's also going to be the possibility that if you didn't qualify in 19, you may be able to qualify based on 2020. Now, the opposite is true. If they come back and look and say, well, geez, you now filed your 2019 return and you got aid based on your 2018, but in 2019, you made far too much money. The good news here is that they are not going to claw back and take back that money. So look at 18 versus 19, determine whether you're going to qualify based on each of the 2 years. If you're going to qualify based on 2019, then no worry, go ahead and file. But if you're not going to qualify based on 2019 adjusted gross income, but you will based on 18, then I strongly recommend that you postpone that return. You can go all the way out until July 15th without the need to even file an extension. Traditionally, when you file an extension, you have to actually file a form to extend out your return. You do not need to do so in this case. One important caveat to this, as you see on the bottom, that if you are an S corporation, which some of my clients that are Keller Williams agents are, the deadline was March 15th. It's been pushed back to April 15th. But you can even extend that out as well. So individual taxpayers, as you'll see here, there's the ability to push your return, let me go back to the previous page, out as far as October 15th. Now, that is very important because it is buying you a considerable amount of time to make retirement plan contributions for the prior year. Remember, when you make a retirement plan contribution, it's up until your tax filing date to include any extensions. So we have an immediate July 15th extension, but we still have the ability to push out all the way to October 15th. So there is time for you to get that adjusted gross income down for the 2019 tax year, even though we are in 2020. Very important to know. Okay, so SEP, solo 401k, they are very similar. There are some slight differences between the two, but they both can potentially get you to the same level in terms of what's an allowable contribution. For those of you that have a company-sponsored 401k, which is different than a SEP or a solo K, if you have employees, you also have the ability to do what's called a profit-sharing contribution. The one thing you have to realize is that when you make a profit-sharing contribution, that money is going to need to be spread out amongst your employees based on a formula. That formula usually is driven by how old your employees are, what your salary levels are for those employees. But again, you can get a lot of money into a retirement plan that can further help you, not just in terms of getting the AGI down to qualify for the stimulus, but also getting that AGI down so that you can pay less in federal and state income taxes. So for 2019, the limits of what you can put into a SEP, a solo 401k or a company-sponsored 401k plan, the limit is $56,000. So to get to that level, if you are a Schedule C, you're not an S corporation, the amount that you will need to earn to get to that level is likely somewhere around $280,000 if you have a SEP. Again, for those of you that are an S corporation, when you are an S corporation, you actually pay yourself a salary. So let's just take Matt Carbray Real Estate LLC, who is taxed as an S corporation. I pay myself a salary of $100,000. I'm 40 years of age. The amount that I could put away is $44,000. If I were over the age of 50 in 2019, at any day in 2019, so if I turn 50 on 12/31 of 19, I get the higher limit, which is $50,000. So 56 is your max. Depending on how you're structured as a business is going to dictate how much you can get away. And depending on how much you net, if you are a Schedule C, is going to determine how much you can get away as well. But it's an amazing opportunity to put money away for retirement, reduce federal and state income tax, and then lastly, to get that AGI down, as we've all talked about. The extension to put into a health savings account, for those of you that are clients of mine, you have heard me pound the pavement on this, and I will do so for as long as the tax code is the same as it is today. The HSA is the greatest tax vehicle in the tax code, bar none, unequivocally. It's the only sort of a vehicle that allows you to get triple tax exemption. There is nothing else that gives you triple tax exemption. Let's go through the three different ways that you get tax exemption. Number one, contribution that is made is with pre-tax dollars. It is reducing your adjusted gross income. That's number one. Money within the HSA grows without you having to pay any income tax on that money. I don't know if you're aware, but about 85% of Americans are not aware or they're not utilizing it, but you can invest your HSA. How great is that? I mean, think about where the stock market is right now, off 25% from its height. Great time to put HSA dollars to work, just like it's a great time to put retirement dollars to work. You can make an HSA contribution for the 2019 tax year. Big misconception is you've got to make it by the end of the year to count for the current year. Yes, that is the case if you work for the Travelers or the Hartford or you're a W-2 employee anywhere else. Not the case if you're self-employed. Those are the 2019 limits. $3,500 for an individual, $7,000 as a taxpayer. We talked about two levels of tax exemption. Tax deduction on the money goes in. Number one, no taxes on the growth. Money comes out tax-free. Nothing in the tax code provides for that. Not a Roth IRA, because a Roth IRA is funded with after-tax dollars. I love the Roth IRA. I think it's one of the greatest vehicles in the tax code. It's not as great as the HSA. Couple of provisions to be able to set up an HSA. You have to have what's deemed to be a high deductible health plan. And a high deductible health plan has to be coded as a high deductible health plan. It doesn't mean that you have a high deductible plan. It means that the plan is coded as a high deductible health plan. So better understand what type of a health plan you have. And then there's also a child tax credit that further can reduce adjusted gross income. Much like everything else in the tax code, there's phase outs on whether you can take advantage of that. The tax code is very complicated. Again, as we sit here today, this is what the tax code looks like. But you know, if we're having the same conversation a year from now, there's very likely going to be some changes. So ways to lower AGI, very, very important for the individual stimulus, but just important regardless of that in terms of saving income tax. Okay, here's the tax deadlines again. The typical tax filing deadline was April 15th. Let's get back there. As you can see, it's been pushed out to July 15th. And then the extension is October 15th. For those of you that make estimated quarterly tax payments, yes, the April one has been pushed out to July 15th. But as of right now, there has been no real communication as to whether the other estimated tax payments are going to be pushed back. You can see the September 15th third quarter estimated tax payment is still there because we're not hearing anything differently about that as of right now. I'm sure, much like anything else, we will have more information that will come out specific to our deadlines for those estimated taxpayers, me being one of them. I'm sure a lot of you as well. Okay, let me stop there because that is a lot of information and I need a drink of water here. But does anybody have any questions that I can answer? I mean, any questions that came up that are specific to the individual stimulus?
Not so far. I think a lot of people were waiting to the end. There's a few
Okay,
who were writing questions down.
perfect. All right.
Rothman, I know you mentioned that you were writing some things down. Do you have questions?
While we're waiting, I'll throw out one question. You made the comment that as we sit here today, this is the tax code. If we have this conversation a year from now, it's likely going to be different. We already know they put out a roughly $2.2 trillion relief package, and the reality is that's probably not the last one. I've heard estimates that there could be additional relief packages that could go as high as $6 to $7 trillion by the time we get through all this. The obvious question becomes, regardless of whether it's 2.2 or 6 or 7, somebody has to pay this back, right? So my question would be, and you can tell me if this is too big of a question to ask in this forum, I would assume that it's likely tax codes are going to be changing when this is all over. So I'm curious if there's one or two strategies that you would encourage people to put in place now, knowing that there's a good chance we're going to be paying more taxes in the future in order to pay back all this money that's being leveraged right now.
Yeah, that's a phenomenal question. So the old saying is that the chicken at some point in time is going to come home to roost. And effectively what I'm suggesting is that there is going to be a need for us to try and tackle our national deficit. Now, the numbers are staggering. We're talking about $23 trillion, and there's actually a calculator online that shows you just how much that's increasing on a day-to-day basis. We've been running deficits close to $1 trillion as is, and then you start throwing this on top of it, and the number one source of revenue for the federal government is tax receipts. And if we expect businesses to not be nearly as profitable as in past years, I am incredibly concerned about our national deficit. That would be a whole nother topic, and we could talk about that at length. But the takeaway for me is that in the future, there is an incredibly high probability that we are going to have much higher tax rates. And if we think about that as individuals, what can we do now to maybe start to position ourselves to have a little bit of diversification when it comes to the assets that we're setting aside? You know me, Matt, and I've always been a big believer and advocate of real estate and owning real estate. I think that the tax laws that were recently passed, the 2008 Tax Jobs and Recovery, were intended to really benefit those that are real estate investors. So I think real estate is a great asset to own, specifically investment-based real estate. I will go on further to say that if you're thinking about putting money away for your retirement, remember, for those of you that have a solo 401k or a company-sponsored 401k, you can elect to save either into the pre-tax 401k or to the Roth 401k. You may want to seriously consider putting some of that contribution into the Roth 401k. The limits in 2018 or 2019 were $19,000 into a pre-tax or Roth 401k. If you were over the age of 50, it was $25,000, if you remember from my prior chart. There's nothing that says that you can't split that and put half into one, half into another. That's a good way to kind of hedge the future of tax rates. For those of you that make under the Roth IRA thresholds, the income thresholds, you could do a Roth IRA. That is a phenomenal way to hedge the future of tax rates because Roth monies, when they come out, are not subject to income tax. For those of you that make too much money, there's something called a backdoor Roth IRA where you can effectively make a non-deductible IRA contribution that you turn around and convert to a Roth. Maybe a little bit more involved than today's conversation, but let it be known that there are a lot of things that you could do to build assets in vehicles where you don't as much have to worry about the future of tax rates. And those are conversations that we are having with our clients. Much to your point, Matt.
Perfect.
So a couple of questions came up.
The last thing I want to say about that, though, and this genuinely is not a plug, like Matt didn't come on to get plugged for business. And This is what we're dealing with right now is a perfect example of why we need somebody like a Matt Carbray in our life, right? This isn't what we do all day, every day. It is what people like Matt do all day, every day. And, you know, now's a perfect example, right? There's that saying, when the tide comes out, you find out who was swimming with no shorts on. Well, that's where we're at right now. The tide is coming out, right? And the people who have prepared themselves, you know, they're well positioned not only to weather. The reality is they're well positioned to actually discover and take advantage of opportunity when things get challenging, even in times like this. But it's the work that we've done and the decisions that we've made prior to that put us in that position to be able to weather and even capitalize. So I just want to encourage everybody, you know, right now, some of us are in survival mode, and that's real, right? And we have to deal with that. Yet, I just want to encourage you guys, when you have the bandwidth to do it, find somebody that you can have these kinds of conversations with so that you can start getting those pieces in place if you don't already have them. Amina, go ahead with the questions. Sorry.
So Patty Malucci is asking, how do I find out if my health insurance plan is a high deductible or coded as a high deductible?
Yeah, that's a great question. And unfortunately, just because you have a high deductible doesn't mean you have a high deductible compatible plan. So you can call your health insurer, you can call your broker, but it's very important that your plan is an HDHP. Those plans allow for an HSA to be established with it. This is going to sound crazy, but a lot of things just are. You can have a $10,000 deductible on your health plan, and it's not considered a high deductible health plan. It's all about whether it's HSA compatible. And most of these HSA plans, the way that they work is almost every expense that you have other than annual preventative type visits to the doctor, OBGYN in the case of females, those are all covered without cost, but everything else is subject to the deductible. So if you have a plan that sounds like that, then you most likely have a high deductible health plan, but you either got to call your health insurer or you got to call your broker, and that's how you'll find out.
And Ann Newmeyer is asking, can the HSA fund be used for anything outside of health-related expenses? I believe you touched on that. You want to expand a little bit more?
Yeah, I will. So there's a list of what the HSA could be spent down on, and it's broad. I mean, you could spend it almost on anything. The planning opportunity here, much like Matt and I are just talking about some great tax-related strategies, the best thing you could ever do is maximize your HSA and never spend the money in the HSA. There was a Fidelity study that was done not too long ago that says that the average retiree is going to spend between $250,000 and $400,000 in retirement on medical-based expenses. Think about that if you're married, $500,000 to $800,000. So if we can start accumulating money in our HSA, it's that much more that we're going to have. If you're in a position financially to be able to use money outside of your HSA to pay for health-related expenses, then you're really taking advantage of that HSA. The HSA also allows you to open up an investment account. There are many companies now. Fidelity just jumped on board as well. That's where I have mine. This is not a solicitation for Fidelity, but you can open an HSA account with, I think, as little as $1,000, and you can invest that money. So much like your 401k, just imagine if you're putting $7,000 married, if you're married per year into your HSA and investing it at a 7% rate of return, you'll have accumulated a lot of money, you know, assuming, let's say 25 years. So you can use the HSA for almost everything. However, if you can afford to, take money out of your savings for health-related expenses, and let's try and accumulate that HSA balance because it's the greatest thing since sliced bread.
Awesome. And the last question, I think you're going to get into a little bit more, so I'll ask it anyway, so you can maybe address it once you get there to that slide. Tyler Phelps is asking, if you are approved for the $10,000 and it does not meet the forgivable requirements, how does the payback schedule work?
All right, really good question and really good segue. Thank you for that, because that's exactly where we are now. We're talking about the economic injury disaster loan. So I put a couple of links here, one from the SBA and another from the SBA, as a matter of fact, with the application. This particular loan is one where you are applying directly to the SBA, which is different than the other loan, which is that Paycheck Protection Program, which we're going to get into. This is not a loan. It is titled as a loan, but it is in fact a grant. It is a $10,000 grant that all individuals are going to be eligible for that have a business or are self-employed or are a 1099 subcontractor, which is almost every single one of us that's on the phone here. So as you see what's underlined here in bold, this loan advance will not have to be repaid. I am not sure what they are going to look at and use as a determining factor as to whether you're going to get 0, 10,000, or anywhere in between. I will tell you that what I did, let me pull it up here, if everybody can see this. Here is my application that I submitted for that $10,000 loan. I did it 3 times. And the reason I did it 3 times is because I have 3 separate entities with different ownership. So I did it once for my main entity. I did it as well for a partnership that I have. And then I did it for a real estate investment entity that I own. Now, I don't know whether they're going to send me 30,000 or whether they're going to say, sorry, Matt, but you have ownership in all 3 of these. That was a really good try, but I'm giving it a shot because there's nothing that jumps out at me from everything that I've read that tells me whether I am eligible for just 10,000 or whether I'm eligible on a per entity basis. So to answer the question fully, there is no repayment of this 10,000. It is more of a matter of whether you're going to get it or not. When you go to fill out that application, which I included the link for, it asks you very basic information. The name of your business, the tax ID. If you don't have a tax ID and you're using your social, you would put that in there. If you're operating with a DBA, you can put the DBA in. It then asks you for basic information such as revenue and cost of goods sold. We obviously don't manufacture things in real estate. Our cost of goods sold are our expenses. So that's all that the application requires. As you'll see under bullet point, the second to the last, it didn't ask for a personal financial statement. So I don't know what they're going to use as the basis for this, but the SBA says clearly upon receipt of your application, and then more importantly, upon approval of your application, you will have the monies in 3 days. I didn't check my bank account today. I checked it yesterday. I didn't see the 10,000 in there, and I submitted it on Monday, but I would absolutely recommend strongly that the first thing you do when you get off this webinar is you go and apply for that, because it's 10 minutes of your time. It's potentially $10,000 of monies that don't need to be repaid. As you'll see, it's part of a much larger program where businesses are going to be eligible for up to 2 million, but most of you are not going to be applying above and beyond the 10 grand, and we'll talk about why in a second. The economic injury disaster loan that is going to go up to the $2 million above and beyond the 10 is more so for businesses that are completely shut down. Just think of the restaurants, think of hospitality, think of hotels. Those are the type of businesses that are going to be applying for this, because the basis for getting more than the 10,000 is going to be you having to prove that your business has been substantially affected, resulting in revenues that are down more than 50%. So get that 10 grand. That's the easiest advice I could give you. All right. Any other questions, Amina, on that?
No.
Okay. All right, let's talk about the PPP, the Paycheck Protection Program. There's a lot of misinformation out about this more than anything else. Again, I've included some links here where you can go and get information. As you will read here, starting April 3rd, which was Friday, small businesses and sole proprietors can apply for and receive loans to cover their payroll and other certain expenses through SBA lenders. Starting April 10th, independent contractors and self-employed individuals can apply for and receive loans to cover their payroll and other certain expenses through existing SBA lenders. So a lot of people have said, well, geez, Matt, I guess I don't qualify for this because I don't have any employees. Well, that is not everything that I'm reading here. You can qualify for this if you're self-employed or an independent contractor. Well, depending on how you interpret this, am I a sole proprietor? Am I a subcontractor, an independent contractor? I guess as realtors, you can make the case that you're both. I am advising people to try and go ahead and submit your application now through your SBA lender. And if they come back and they say, well, sorry, we're classifying you as an independent contractor or a self-employed individual and not a sole proprietor, you've got to wait till April 10th, so be it. But why not at least try and get your information there? I've been looking at some of the statistics over the weekend, and just Bank of America alone, the amount of applications they've received and the amount of money that's been requested is incredible. And Matt had brought up that, well, maybe there's a lot more money to come. It depends on how long this is going to go out. I am of the opinion that the stimulus is intended to cover 4 to 6 months. And if this thing goes on longer than expected, yeah, there very well could be more money to come. But there's only 380 million or billion that has been allocated to small businesses and subcontractors and self-employed individuals. And that money's going to go a lot faster than people think. So time is of the essence.
And I think BOA, had 10% of they had applications come in that I think represented 10% of that.
Yes.
By end of business on Friday.
Yes.
If I'm not mistaken.
And that was one day.
One day.
So time is absolutely of the essence. Now, when we talk about SBA lenders, you have to know whether your bank is an SBA lender or not. And almost every bank, other than maybe the very small community banks or credit unions, are going to be SBA lenders. All of the banks are handling things slightly differently. I applied through Liberty Bank, and what Liberty had me do was upload my application, which was super easy. Let me see if I have mine here. Yeah, okay. So this is the top part of the application. It's 4 pages, but there's really only 2 pages that you even fill out. I applied in preparation for this a couple of days ago. I had all my I's dotted and my T's crossed to only find out that Friday morning the SBA changed the application. Oh, great. Thanks a lot for that. But it didn't take me much longer to fill it out. On top of the application, which again asks for your average monthly payroll. And if you don't have payroll and you're self-employed, they're going to want to know your net income over the last 12 months. It's capped at 100,000. I'll show you the calculation in a second, because the amount of the loan that you're eligible for, if you are a self-employed individual, is a little bit different than for those of you that have employees. In my case, I took my average monthly payroll, I multiplied it by 2.5, and that's the amount of the loan that I am eligible for. It then asked me for how many employees I have, which I put on my application. We'll talk about how this differs for those of you that are self-employed, and then we'll talk about the forgiveness most importantly. So these are just some of those timelines and some really, really good resources. There's a great resource from the U.S. Treasury as well. Click through this stuff. You want to get yourself educated about this because there's a lot of money out there, and not just are they in the form of loans, they're in the form of grants, and grants don't need to be repaid, which is great. Okay, let's talk about John Lockbox. John Lockbox is a 1099 realtor who files a Schedule C. His net income for 2019 was $150,000. How we're going to determine his loan, remember, capped at $100,000. So we're taking $100,000, we're dividing it by 12. We're getting a monthly amount of 8,333.33. We're multiplying that by 2.5. The loan that John Lockbox would have available to him is $20,833.33. So even though John made 150, it doesn't matter. If John made 450, it doesn't matter. The amount of his loan is going to be tied to that. If John has employees, he can use those employees and the wages that he pays them to factor into that loan calculation. So let's just say John had a $50,000 employee. John then could take $150,000, divide it by 12, get to whatever amount that is, multiply it by 2.5, and that's what his loan amount would be. So the one thing that I still have yet to really get a strong opinion on is when the loan is taken and the loan is granted, how much of that loan is going to be forgiven for someone who's self-employed. When you have employees, it's pretty cut and dry. What they're going to be looking at is the 8 weeks after that loan has been extended to you, how much of that you spent on payroll, how much of that you spent on rent, utilities, if you have a health insurance plan for your employees and you have a retirement plan and you make contributions like a match, how much of that you pay out in the 8-week period after that loan has been granted is going to determine how much of that loan is going to be forgiven. So if we say that you were granted, for argument's sake, a $50,000 loan and you spend $40,000 on wages, you are going to have $40,000 of that loan forgiven. I mean, that's powerful stuff. But in the case of a self-employed individual where you don't have any employees, are they going to look and say, well, what has been the material impact to your income over that period? And are they going to use that for the basis of what is going to be forgiven? Still a lot to come out. So much like I learned a lot on Friday about this process for businesses, because we have an April 10th for self-employed and subcontractors, I suspect that in a week's time, I'll have a little bit more clarity on how the forgiveness is going to work. But let's just say, for argument's sake, that there is no loan forgiveness. Let's say that this is just a pure loan. The loan is at 1% interest for 2 years. And there's no prepayment penalties if you want to pay it back sooner. And then payments are going to be deferred for 6 months, although the interest is going to accrue. But interest at 1% is negligible. So you're talking about having a 30-month loan with as incredible terms as you're ever going to get. I mean, you go to a bank and you try to get a line of credit, you're looking at 5 to 6% easily. This is much more favorable. And then no collateral or personal guarantees are required. So for those of you that are looking at your situation, and Matt's advice is the greatest advice that I could give, which is better understand where you're at. Understand how much operational cash flow you have to pay your personal bills, to keep your business going. And I think the one thing that we're all going to learn from this experience is that we all need to have, if I'm in the real estate profession, you need to have 6 months, and I would even say 9 months of money on hand to cover expenses. You guys are in an industry that is very cyclical. There are a lot of unknowns. And what is going to happen 6 to 9 months coming out of this, there's a lot of uncertainty. Is the consumer going to feel comfortable with going out there and making large purchases? Is unemployment going to get anywhere near back to where it was, which was 3.6% before this? So we could be in for a very rocky ride for the foreseeable future. And I always tell all of my real estate clients that I want to see an absolute minimum of 6 months of expenses in some sort of a conservative, safe place. I'd love to see 12 months, because those realtors that have put themselves in the position to have cash flow to get through this are the ones that are going to make it. Unfortunately, much like every other industry, the businesses that don't have 6 to 12 months of operational cash flow, the mom and pops, they're not going to survive. I hate to say it, but that's the reality of the situation. So I'm hopeful that we're all going to be in a position to get through this together. But if there's one thing that we need to take from this, is when we do get back up and running and we get back to some sort of normalcy, that should be the most important takeaway for everybody on this call, is you got to build that up, because, you know, again, we're in for some tough times here. But there are loans available, and although it's called a Paycheck Protection Program, if you don't have people on payroll, you still can qualify for this.
Matt, can I jump in and
Sure.
just share and have you tell me if this is accurate or not? Right? If you're in a position where you're not sure that you have the financial runway to weather what could be the worst case scenario, right? Because we need to plan for the worst and then take action to minimize the chances of the worst being the reality for us, right?
Mhm.
So let's plan to weather the storm and then let's go to work and do as much work as we possibly can in this challenging time so
Yep.
that our reality doesn't end up being the worst case reality, right? We get to choose the degree to which this is going to impact us at a large scale. So my belief in listening to all this would be the smart thing to do would be apply for the loan, knowing that for a lot of our independent contractors, there's a good chance a lot of this loan may not be forgivable based on what we know right now, right?
Mhm.
If you don't have employees, if you don't have rent, if you don't have those expenses, the reality is
Correct.
they end up using it on things that don't qualify for the loan to be forgivable. So the smart thing to do is you go back to extending the runway, right? Go apply for the loan, make sure that capital is there, but this is where you've got to be super disciplined. This isn't go to Sizzler money. This is that money goes in a bank account and does not get touched unless it's absolutely necessary. That is your extra bricks in the runway.
Yeah.
You absolutely need it. Otherwise, leave it in that account, go back to the original strategy, cut your personal and professional budget to the highest degree you can to extend the cash you have, and possibly you get through it without having to touch this and you can pay the loan off, right? There's no value in coming out of this with debt unless that debt was necessary in order to extend
Correct.
a way to get through these challenging times. Would you agree that that makes sense?
Yeah, unequivocally. And I'll also make a statement here that I encourage all of my clients to have as much capital available to them at all times, specifically a home equity line of credit. If you can get a business line of credit, it gets very difficult to get the money when you need it, but you always should try and get access to money when you don't need it. It's kind of crazy how the banks operate, right? But when you really need the money, then they are more inclined to not want to give it to you because they think there's an additional risk of default. But get as much capital as you possibly can and have access to it. There's no cost to you if you have a line of credit through your business other than maybe a UCC fee of a couple $100 a year, but have access to as much money as you possibly can. And if you can get this loan, as Matt alluded to, get as much as you can and then reassess how much of it you actually need. The basis for forgiveness, we'll figure that part out. We're not yet there yet, but you need to get as much as you possibly can, and you can always prepay it. There's no prepayment penalties. The interest is as low as you're going to get with anything else. So get on this PPP as soon as you can, but also do some of the things that Matt mentioned at the first part of our conversation here, which is get on the phone with your mortgage servicer. If you can push out, 2 to 3 months, or on your car payments, or talk to your credit card companies and see if they can maybe give you 0% or postpone payments if you carry debt over month to month. If you have student loans, whether it's your own or whether they're children, I mean, there's a lot that you can do. I had a conversation Friday with a client who did all of these things, and he found that he was saving $8,000 over a 3-month period. I mean, that very well could be a month or 2 months worth of important expenses that you need to keep yourself running. So do all these proactive things. The governor came out and also said that as part of this, that the credit card companies, the mortgage servicers, this is not a knock against your credit. It's a non-reportable event. So do these things. These are all things that can help buy you some time. Here's actually the application. So I showed you the top part of mine, but here's what you're going to fill out. There is a second page to this, but all it is you initialing certain things, asking about your history, whether you've ever been convicted of a felony, all the stuff that you would expect anytime the government's going to give you money. Are you subject to backup withholding? Do you have an existing SBA loan? So forth and so on. So super easy application. I mean, if this takes you more than 15 minutes, I would be surprised. But as I talked about this average monthly payroll up here, again, if you're self-employed, the likelihood, and you don't have any employees, it's going to be that 100,000 divided by 12 times the 2.5. Put that number in here if you have any employees. So if you have employees, there's the potential that you're going to get more, and there's the potential that there's going to be a higher level of forgiveness on that loan, because this whole Paycheck Protection Program, its intention was for you to keep people on payroll and continue to pay them. So it's less of a drain on unemployment, and that's what they're trying to incentivize people to do. And that's really where the forgiveness comes in. But again, you can see purpose of the loan. I checked, in my case, payroll, and I checked, I checked lease, mortgage interest. If you're paying utilities, you can check that too. So check as many of those as are relevant. This is where you put the ownership in here. If you're self-employed, most likely you. You put your EIN if you have one, your social security number, address, all pretty straightforward. So I think we're getting kind of to the end here, and then we'll have as many questions as are needed. But first things first, get on that $10,000 grant. I mean, do that immediately. When you get off this webinar, go to the link that's in here and get that done. Again, if you haven't filed your 19 return, look at 18 and have a conversation maybe with your CPA about, hey, what do you think? Am I better off holding off on this because I'm going to qualify based on 18 but not based on 19? Or, you know, hey, maybe I'll file my 19 return because 18 and 19 are similar, but I can still make contributions to HSAs and retirement accounts to get my AGI down for 2019. So I think you really need to get all of your professional advisors on the same page. I had a conversation with a realtor, non-Keller Williams, last week, and we were able to get him down below the limit for 2019 by making a SEP contribution. And now he's going to get stimulus, whereas he wouldn't have prior. So there's some stuff that still can be done. Even though we're in 2020, we can still take advantage of planning for the 2019 tax year. For S corporations, for those of you that are an S corporation, you file an 1120 tax return. Apply for the PPP immediately through a Section 7A approved SBA lender. I recommend that you go to whatever bank that you have a relationship with, because they are going to look to their existing clients and give them preference. They are not going to put your application ahead of their own. So start with whoever you have a relationship with. I had a call with a client of mine yesterday who sits on close to $1 million in their bank. Called up their bank, and their bank said that we're not an SBA approved lender, and they're not participating in the program. So what we had them do is open up a bank account with an SBA approved lender yesterday. Now they're considered a client, and now they're going to get their application pushed through. So you have to know whether your bank is an approved lender. More often than not, they are. But this client, who had a very small bank up in the Northampton, Massachusetts area, unfortunately, they were not a participant. We had to scramble, and now they're in the process of applying this weekend. So when you do apply for the PPP, they are going to be asking you for information. If you have people on payroll, you're going to have to get your quarterly payroll records. So if you have a payroll vendor, it's your 941s. If you do it yourself or do it through QuickBooks, you're going to need to get that corresponding information. Much like anything else, you guys are all familiar because you're in real estate. When your clients go to apply for a mortgage and they send stuff in piecemeal, the things get held up, right? Or all of a sudden they need updated documents because it's taken too long for you to get all your stuff together. Whatever your bank asks you for, get it to them, send it all in at once. I uploaded all my documents yesterday to Liberty. You know, I'm pretty sure I gave them everything they need, but I strongly recommend that you do that. And I'm here to help. I mean, I work with a lot of Keller Williams agents. I know what it's like to be a self-employed individual. I'm one myself. All of my information's here. If you talk to some of the other Keller Williams realtors, you know, feel free to ask their opinion of me. But I'm here to get you all through this. I am trying to take advantage of everything that's been made available. I am also going to constantly try to update people and maybe get some sort of an email commentary out that I can send to Matt, that we are sending out to our clients, because things are constantly evolving. And I'm sure a week's time from now, if not sooner, something's going to have changed. or there's going to be more clarity regarding the forgiveness. But I'm here to help.
Awesome. So Amina, we've got a couple of questions that have floated on Facebook. You want to run through those quick?
Yeah, so Camille is asking, the economic injury loan, how do you figure out the cost of goods sold for the 12 months prior to the date of disaster? Sorry.
Yeah, so if you're looking at your Schedule C, which is what you're going to need to fill that out, it's first going to start with your gross revenue. So your top line, whatever you receive from real estate activity. So let's just say, for argument's sake, that I took in $200,000 in real estate commissions. Then I'm going to look at all the expenses, which are all on that Schedule C. So insurance, errors and omission, if you have to have it, professional liability, health insurance expenses, wages, rent, software, computers, all that stuff. And then you'll see that on your Schedule C, you'll see cost of goods sold. And that is the number that is just above your net revenue, which is then what comes from your Schedule C and goes on to your 1040 under business income. So that's where you're going to find that number.
Yeah. So it is, in fact, their expenses. That was
Yes.
confusing for a lot of people, because when we think cost of sale, we think of, or cost of goods sold, I think we kind of translate into like cost of sale, which is splits with the brokerage, splits with other team members. So there was a lot of confusion around whether that was expenses or not. So
Well, and it is, yeah. So let's just say, for example, that your gross real estate revenue is $200,000. If that $200,000 has already factored in splits and other stuff, then you wouldn't then add that back. But if you get $200,000 in gross real estate, but then you've got to pay out of that $20,000 to Keller Williams, then that would be included as part of your expenses. So you have to, my situation is one where what it is that I get paid is what I get paid. I give something to my affiliate already, so I don't then add that back again. Hopefully that makes sense.
it does. And just so I can give clarity to everyone who's on the call so they don't get confused. So on our end, in our business, your 1099 income does not include all those splits that go to other team members. They go to your office, your brokerage. The government has nothing to do with that. They never see that money. It's not yours. You never touched it. It doesn't show up as an expense. So for you guys, it's your 1099 is really your gross income. And then from there, you're taking your expenses.
So if someone made an error in putting that in and have already applied, how do they go back and fix that, or do they make a second application?
Yeah, I don't know the answer to that, truthfully. Again, what you are signing off on when you submit that is, that you're not going to perjure yourself and that the information is accurate and reliable. You may want to send another application in, because if you are sending information in that is not factual, technically it's illegal. If it's done because you just didn't fully understand what they were asking for, that's one thing. And that's what I suspect is the case with everyone here. So you very well may want to resubmit that application and put another one in there. I just don't know how it's all going to work, right? Because I've submitted mine on Monday. I submitted 3 of them. I haven't heard a word yet, not a simple email. So I would just do it again, because at least that way, by doing it again, now you've at least updated and made accurate the information. So I would submit another one. Any, I see an HSA question. Okay, we answered that one from Ann. So I just want to say that when we talk about what's available and we look at the hierarchy of the value of what's available, first and foremost, anything that you can get that you don't have to repay is of incredible value, right? If you get a grant, well, nothing better than that. So I would start there. And then the PPP, where that's a loan with incredibly favorable terms that also has the potential to be forgiven. That's number 2. Number 3 is the EIDL, which is above and beyond the 10 grand. So the 10 grand is like an advance to everybody that's been affected by this, where you can get up to 2 million. You're going to have a hard time most likely making a case for that unless you can say, hey, my income is down more than 50%. And then that loan is at an interest rate that's much higher than the PPP. It's a sliding scale. It gets up to around 3.75 or 4%, I believe. The repayment terms and the length of it are longer, but that is probably the last place that I would go. And that's really if you absolutely need it and if you really can make the case that your business is that much down. So start with the 10,000, then do the PPP. And then if you want to do the enhanced EIDL and you could really make a strong case for it, do it. But getting your accountant on board and having this same conversation with him or her is what I also would recommend.
Amina, was there anybody who wanted to come live? I thought I saw somebody say they had some questions.
That was Jeff Rothman. Let me, I promoted him to panelist. Let's see. If he comes in. There he is. Jeff, you're live, Jeff Rothman, and you need to unmute. I can unmute you right now.
Okay.
Jeff,
You're live,
we can hear you.
Hold on. There we go. All right. Hey, everybody. How you doing?
Hey.
Hey, everybody. Yeah, I got a couple questions for you. Sorry, the sunlight there. So, I mean, this stuff obviously is confusing. I sat down with my financial advisors and accountants and everything the last couple of days going over it. So there's questions on like, so whether, like you said, with the EIDL, you went through and did one for each of your entities. So we went through a lot and did a lot with the CARES. So just, you know, I run well, you guys were talking prior, I'm a broker, so I run as an LLC. And then at the LLC, like I pay my wife her commissions and things as they come in. So so a lot of it comes down to the payroll commissions type thing, like how can I pay that out? And is that the correct way that I did it with going with the CARES with the Rothman Realty Group? And then myself, how do I pay commissions out of that and hopefully get grant? And you said also to maximize the EIDL, you put down yourself, your entities, et cetera. And then this can be like, I guess, a lot of questions within the one. But when you go on that form, there's your trade name, there's a business name and a trade name, even though it's for an individual, the business legal name, trade name, and then it gets into the rental properties, which my wife doesn't have any in her name, but I have a decent amount in my name. So there's a lot of things to that. So what's the best route for someone that a broker or an agent that operates under an LLC to try to get more than the $10,000? Because, you know, if the market gets sideways for a while, you know, 10,000, you know, might not cut it for too long. And then I have more if you can answer more.
Yeah, so I'll just tell you what I did personally, Jeff, is I applied for each of my entities. So I have an entity called Ridgeline Financial Partners, which is an S corporation, which I'm the sole owner of. I applied for 10,000 there. I have another entity that's Carbray Stawn Financial Partners, which is a partnership. And I have another partner, and I applied for it there. And then I have Carbray Properties, which is a real estate-based investment entity, and I applied for it there. Now I have another entity that I own 100%, but I didn't apply for that. So I felt that every entity I have where there's different ownership, so one of them I'm 100, another one I'm not, and the other I'm a different ownership, and I have different tax IDs set up for each of those entities, I went and I applied. Now, again, there's no real formal guidance as to whether I'm eligible for each of the individual entities. The one thing that I didn't do is apply for another entity of the 4. So I applied for 3 out of 4 because I'm also 100% in that. And when they ask for your information, when you fill this out, they ask for your social security number. So I'm guessing that they're going to see that, okay, yes, it's a different tax ID, but in terms of the owners of that, me as the sole owner having the same social, I just figured they would catch that. So I would advise you, and I'm sure your CPA would too, to apply under each of the different entities, especially in the case where you have varying ownership percentages, which is what I have in those 3 or 4. So that's first and foremost. You know, if you do in fact have employees that are on payroll, and that's going to be the determining factor about the forgiveness, the reason that this has been put out is so that companies are going to maintain keeping those people on payroll. And also if they've laid off those people, that they're going to consider putting them back on. So the forgiveness is going to have to do a lot with what your employee count looks like prior to this, and then what your employee count looks like after the loan has been extended. And that's the biggest determination of the forgiveness aspect of that. If you are in fact paying out commissions in the form of 1099, that's still something there's a lot of gray there. I don't know about the forgiveness for outside of W-2 classified employees. I don't think anybody really has formed an opinion one way or another. I've read a lot about this, but as of right now, I'm not sure when the forgiveness comes, they're going to look back and say, we'll offset that loan based on monies that you then paid to a 1099 employee.
Yeah, I'll chime in on that a little bit, and Matt's 100% correct. There's no clarity around that as far as whether or not 1099 commissions can be included in payroll, where people are picking up an interpretation that it could be as commission is listed. You know, when it goes through what is covered, the word commission is there. Most of the people that I know that are operating brokerages, I actually know people who have submitted for the PPP and included commission, and I know people, the majority that I'm aware of, have left commission out of it. My concern in including commission as a brokerage was that would that create any issue with our agents going and getting any type of assistance? So my concern was, you know, even if I said, well, if there's any gray area, I'm going to go for the maximum amount. My concern was if we did that as a brokerage and then an individual went in and applied, theoretically, that's double dipping on the same revenue. And my concern was I might accidentally take the opportunity away from the individual agents. But again, to Matt's point, it's not really clear, and there's a bunch of articles out there that at the end of the day, once you read the whole article, the net result of the article is it's not very clear.
Okay.
Again, the majority that I know have not included commission in their applications.
Yeah, so I see where he said, so with the PPP program, which I filed for all my entities, it has all my EIN numbers on there, but also as the owner of my social. So obviously I can't go on the EIDL and apply for 10 because that's going to it's going to be double dipping, I'm assuming, on that.
Well,
But
the
my wife's
EIDL
case-
and the Paycheck Protection Program are two completely separate. And if you get the EIDL, it doesn't preclude you from being able to get the Paycheck Protection Program. So you got to apply for the EIDL for all of your different entities, and maybe you'll be successful. I mean, again, I filed that on Monday. I haven't heard a word yet. So I'm trying to do all of this so I can get to the front of the line, not as much because I really need the money right now, but I want to know what to expect so I then can pass that information along to you. And as of right now, I've got no idea whether I'm going to get 10,000 or 30. I have a feeling I'm probably going to get 10. The good news on the EIDL is by you applying for that, it doesn't permit you or prevent you from applying for the PPP. I don't know whether they're going to look at the PPP for all of your different entities, but I think that you'll be eligible to apply for all of them. It's just more of a matter, are they going to extend it to each of them? I think the answer to that is yes, that they are. The determination of what's going to be forgiven is probably the only part of this that I really don't have a strong answer on yet, but hopefully will.
And with that, I think a lot of people on this call, just individual agents. So when you go on that form, it says business legal name. It also says trade name under it. So you put your personal name under both?
Yeah, so the business legal name would be, if you are an LLC.
No, I'm just talking for the average person. That's just Jeff Rothman, Realtor.
Yeah.
So just, you're going to put your name twice here, just trade name. It's going to be both for that. And one more question, if you don't mind.
Sure.
Yes. So when you said about that, getting that money and what you use and how you use it is going to be forgiven potentially. So I had a question and no one could answer yet, and not sure if you can, is, so let's say you have an account, you're sitting there with 25,000, whatever your operating account is sitting there, and you're granted, or the $50,000 to PPP, whatever comes in, and over the next 6 to 8 weeks, how you use that money. How are they gauging that? I mean, because now you went from 25 in your account, they gave you the 50, whatever you applied for. So, you know what I'm saying? How are they gonna literally say, okay, well, now you have 25,000 left, so yeah, you use 50,000 of it. are they gonna, do you have to go back with an expense report for this, or are they just gonna look at your account, the banks?
That's a really good question. So the way that I understand it is that they don't care what you have in your bank to start. They care how much money that they're going to give you in the form of a loan. And then they're going to look after that loan has been granted, and they're going to say, over the 8 weeks after that loan and the money has been given to you, how much of that did you spend on payroll? How much of that did you spend on rent, utilities, group health insurance? There's a list of all of the different expenses that are going to be factored into that. But what is of greatest importance is the amount that is used for payroll. They're only going to allow you to use 25% of non-payroll based expenses for purposes of forgiveness. So if we use your numbers and you get a $50,000 loan and you spend $25,000 on payroll, well, $25,000 of that's going to be forgiven. But if the other $25,000 is spent on rent, utilities, and everything else, they're only allowing you to use 25% of the loan value. So quick math, well, $12,500. You're not going to be able to offset all of those additional expenses because there's a cap on non-payroll based expenses. So payroll's the big driver on all of this, and that's why it's called the Paycheck Protection Program. Is it's trying to get companies to keep people on payroll and throughout this whole period. And after the money is extended, they're going to then, just like when you apply for the PPP, I had to send all my quarterly tax reports to Liberty Bank. When they go for purposes of determining the forgiveness, you're going to have to send payroll reports again so that they can say, here was your payroll before, and then here's your payroll now. That's going to determine the forgiveness.
And even though it says payroll, employee salaries, commissions, or similar compensations, the commissions is still a big if on how they're going to treat that. If I give Melissa, my wife, Dwight 1099 or whatever, if I give her a commission of $25,000 over the next 3 months or whatever, are they going to look? We don't know how they're going to look at that.
We don't, but here's what I'm telling all my clients is that as more information comes out and we better understand what's going to be factor into the forgiveness, let's say your wife is a non-owner and you can give her more commission money and that could provide forgiveness. Well, you're going to want to do that. So between now and the time that that loan is granted, there's going to be enough information that comes out that is going to determine what's going to go into the forgiveness. And there's going to be some planning involved after the fact, right? Because if you're capped at $100,000, maybe you can give more money to your spouse and get more forgiveness that way. So there's going to be a lot of planning going into this, much like the planning that we're having those conversations with individuals to qualify for the individual stimulus. There's going to be a lot of planning opportunities when it comes to trying to position yourself to get as much forgiveness as you can.
That's awesome. Thank you. Appreciate it.
Yeah. And the one thing that I have yet to figure out is I own my own building and I pay myself rent. Are they going to get deep enough in the weeds where they're going to say, well, geez, Matt, how much are you paying yourself in rent? Is it a market rate level of rent? Is it an arm's length transaction where you have an existing lease between yourself? I don't know. But a lot of people pay themselves a lot of rent, or they use a home office deduction. Are they going to allow for that? I don't know the answer to that. We'll see.
I totally understand. I'm with you on all those points. So,
yeah.
All right. Thank you. I appreciate it, Matt. Thanks,
Absolutely.
guys. Take the time.
Yeah, you got it.
I think we've answered most of the questions. There's just one lingering out there, so I want you to answer it live, Matt. Are realtors applying for unemployment, and are we even allowed?
Yeah, well, so I have heard that there is the possibility that realtors could apply for it. Whether they're going to be successful or not, I mean, historically, no, you can't apply. When you're self-employed, you can't apply for unemployment. You don't pay into the unemployment fund. You don't pay for unemployment insurance. But that, again, is a gray area. I've heard from some people that you potentially may be able to apply for it. But I would say high probability you're not going to get it. Even though unemployment has been expanded upon significantly, the government is now providing, the federal government, another $600 per week on top of what the state is giving you for 4 months. They've also extended unemployment from 26 to 39 weeks. I wouldn't get your hopes up on qualifying for unemployment because unemployment is intended for those that are truly unemployed, not underemployed, not maybe not making as much money as you were going into this. So I wouldn't get your hopes up for it. I think it's going to be a fruitless endeavor. Apply for what's out there in the form of a loan. I think that's far superior.
Yeah, and I'll just chime in on that. There is a, I'm not going to say it's fact, but the information that I've seen and heard is that realtors, there's going to be an opportunity for realtors to apply. However, the details of that is what's going to make it a fruitless effort for the vast majority of people, right? To Matt's point, unemployment is for people who don't have a job. The reality is we're not employed, but our opportunity to earn still exists. It may just be reduced. So if you look at unemployment, what is it going to require to even qualify? Are you going to have to disassociate from the industry? And at that point, did you actually quit, or are you unemployed? Like, there's so many, it's hard to imagine a scenario where they're legitimately going to be able to make it a benefit to you where it's going to help you more than it's going to hurt you. So it's another one of those things. There's going to be more information coming out about it, yet I wouldn't hang my hat on that being an opportunity. Yeah. I only have one more question, if it's okay. And this is kind of a tricky one, and I would just love to get your opinion. You talked about access to capital earlier, really throughout the entire conversation. So lines of credit is one of the things that business owners often have as access to capital. Anyone who was around during the last significant crash knows that access to those lines of credit got shut down during the last crash. Do you think it's a realistic concern going through this that lines of credit may get closed? Because obviously banks, everybody's being impacted. So I'd love to hear your thoughts.
Well, I think you just have to draw a little bit of a parallel and do a little bit of a comparison in terms of where we were in 08 and 09. So in 2008 and 2009, what drew us into a recession were the banks and the financial institutions.
Yeah.
And bad debt, subprime mortgages, negative amortization loans. I mean, I remember seeing it going, this is like the Wild West. I mean, This is ridiculous what's going on. And that's the reason that you were seeing a lot of these lines of credit get drawn back in. Now, fast forward to 2020, and the financial institutions are in as good a shape as they've been in a long time. So I don't anticipate you're going to start to see that happening. There's no signs of it yet. I talked to all my business owner clients, and no issue there. I've talked to a lot of consumers. They're not getting anything that's suggesting that the banks are trying to take these things away. But much to my point, when you need to get credit, you need to get it when you don't need it. If you want to start to get credit because you need it and your financials don't look as good, your debt situation's bad, your income's down. So you have to have a line of credit. I mean, that is imperative. And whether it's done through your business or whether it's through accessing lines of credit on your home, that's the best advice I can give anyone on this call is make it a point to do that. Rates are incredibly low right now, and you're not paying much of any cost other than maybe a once a year, like I said, a UCC filing fee if it's a business line of credit. You're not paying anything for unborrowed money.
Yeah.
So, but I'm not concerned about a 2008, 2009 reoccurrence of what happened then. I mean, I remember that. People were going, Matt, my bank just called me and told me they're taking my line of credit away.
Yeah, so it was interesting. I knew people who were mid addition on their home using a line of credit and it got shut down. Honestly, me personally, I had a line of credit to run both my real estate business and I was flipping houses back then too, and had cash sitting around, which, being that the market was challenging, it felt really good to have cash. So I was hoarding the cash even though I had a balance.
Yeah.
And finally, one day I said, this is crazy for me to be hoarding cash and paying interest on the balance. So I paid off the balance, and it took about 2 weeks to get a letter. And the minute I paid the balance off, they actually shut the credit off, and that available capital went away.
Yeah.
But it's a really valid point you're making, that the causation of what we're dealing with is very different right now. So that makes sense.
Very much.
Awesome. Amina, do we have anything else? I know Matt has been super gracious with his time. I want to let him get back to his family.
No, we're good. We're good. I think we've answered all the questions, and we want to thank you again, Matt, for joining us on this call, and to all of our agents that's watching. This is the plan you put in place just in case. It does not eliminate the action and the activity, the lead generation that you should be doing during this time. This is just giving you extra runway. keep our heads down and let's keep, helping our clients and checking in with them and doing what we have to do to continue to grow big businesses even during this time.
100%. Awesome. All right. Thanks, Matt. Really appreciate it.
You're very welcome. Everybody stay safe out there. And any questions, all my contact information, the PowerPoint presentation, Matt, you have, feel free to distribute that amongst your group. I'm happy to help everybody out.
We do. And if we didn't already, we will add Matt's contact information to the comments under the Facebook stream for this video as well. So if you guys
and all of the links have already been added in the chat under the stream, and we'll post it out again with Matt's contact information.
Cool.
Awesome.
All right, Matt. Appreciate it.
Got it. Thanks, everybody.
See you guys.
Take care.